Hello and welcome to the Weekend Investing Daily Byte of 26th of July. And what happened in the market was nobody's expectation. And the average expectation was that, we are just buying time right now. Nifty is consolidating and it will require a trigger to move up. But no, the markets decided that Nifty is going to go up like a rocket, 400 points, new high. We'll talk about it. The main story that we want to cover today is casino gambling more rewarding than trading. SEBI has come out with a new paper on what is the statistics of how traders are doing in the India market. Earlier, they had done a paper on FNO traders. Now they have done in cash market. We'll talk more about that in the second half of the video. First, please do try to subscribe to the channel. Where is the market headed? So Nifty is very, very clear. And as I've been mentioning last a day or two, Nifty is not signaling any kind of weakness. Even post the budget day, the 2 days were, one was a flat day, the other day was a gap down and build up back to where it was. So there was no give up happening, and that was an indication that Nifty at least is not willing to give up at this level, which is very, very good news. The support that we drew yesterday was held, and Nifty has closed at 24834, a new all-time high. This 400-point move has come out of uh, beyond anybody's expectation, 428 points on the trot. And this has really butchered all the bears who were waiting for this support to break and potentially at least get till here, if not till election day high. So all hopes belied for the short community, but longs are enjoying. I think today's FII figure also should confirm a big buying from there. There is talk of few rating agencies upping India's rating, so that also could have, um, attributed to this very consistent through the day rise, which was not, expected or matched by other parts of the market. So Nifty Junior was up for sure, 1.65%, but nowhere near where the steadiness of Nifty there. In fact, mid caps were up 1.7%. Again, we are almost at a new all-time high. So nobody was expecting this 4 days back, and now just see that we are here. So always don't try to predict the market. I think at least I may have said it for 50,000 times in the last 8 years, but my uh, experience of the last 29 years it is now that market prediction is futile. Market can remain elevated or irrational for longer than you expect. Market can remain irrational, low valuation for longer than you expect. Market can have any kind of uh, growth or trend without any logic, because markets are basically a auction mechanism. It's a demand and supply game. If you start to put logic to it, you will get left behind. That is the situation of the market globally, not just India markets. Small caps were muted, I would say. There was not so much enthusiasm in small caps, but yet nobody's complaining about 0.9% uh, move up there. Bank Nifty is the major one. Bank Nifty, today there was news that RBI is tweaking its liquidity ratio requirements for the banks, and banks will get hit a bit because of that. But today that news came, and already in the last 4 days, Bank Nifty had lost 2,000 points. So everything leaks actually. The markets know most of the changes that are coming well in advance, and the same has happened in Bank Nifty. We are still critically poised on Bank Nifty. We are still below this average, but slightly above the election day high. So I think, and a bullish engulfing candle today. So I think Bank Nifty is also back on track. If you recall, yesterday I said that Bank Nifty fall is done for now. Uh, Today's heat maps, I mean, it should not be called a heat map, it should be called a cool map, because it is all green today. ONGC just for the sake of one stock going down had to be minus 1.25% along with Tata Consumers a little bit. But you can see the flurry of green that we have on the screen today. Bharti Airtel racing 4.5%, ITC 2.5%, Infosys, TCS, HCL Tech, Wipro all racing up. State Bank of India, Bajaj Finance, Kotak all going up. Steel stocks racing up. Tata Steel, Ultra Semco, JSW Steel, Cement and Steel Uh, Autos, Tata Motors, Mahindra and Mahindra, Maruti, Bajaj Auto, all doing well. Nowhere was there any weakness, and that Reliance as well up 1%. So all in all, a very good Nifty move, but the same was not reflected in Nifty Next 50. You can see that while it is green, it is not as universally green as the Nifty, but nobody is complaining about 2.9% on REC, PFC 2.6%, DLF 2.2%, ABB, Motherson, Trent, Zomato, Vedanta, Tata Power, all doing very well. HAL, BEL, all PSC stocks also doing very well. DMart, United Spirits, Adani Green, Godrej, CP were some of the stocks that were slightly in the red. Sectoral data, all in the green. Metals leading the rally now, 3%. Suddenly now there's momentum in metals. Autos 2.4% up, pharma 2.4% up, IT 2.3% up, infra 2% up. This is signaling that the market is not weak at all. That is the the extract that you need to take from the market. The market is telling you a story, you better listen to it, and don't apply your own thesis to the market. Is what the market is telling you, rest of course is your choice. So on the weekly basis, now most of the sectors have recovered from the weekly fall except private banking, real estate and PSU banks, and they may do the same in the coming time. So looks very, very healthy now. All-time highs are nothing to fear. All-time highs are essentially telling you that the markets can go up further. Metals, if you recall, have stayed weaker since the election day. You can see that we on metals index we are not even close to election day high, and Nifty is much higher than election day high. So as a rotation now, the volumes or the liquidity is coming into metals to make sure that they catch up. But autos are, just see where autos are versus election day, almost up 10% since then, and breaking out of this very nice channel at 2.43%. In terms of stock spotlight, insurance companies are doing very well. So New India Assurance Company raking up 12.8%. Insurance companies have been benefited in the budget, and this particular company has been consolidating for the past almost 7-8 months, and that is where this is going. Recall that very recently, just a couple of years back, it had hit a low of 80 rupees, and now it is coming back from a 80% drawdown and doing 4x in 2 years. So whatever is the baggage of the past in any stock, don't worry about that. Just see where the current trend is, and that current trend should determine whether it's a buy or a sell for you. Now let's come to the main story of discussion for today. Casino gambling, is it more rewarding than trading? It sounds very funny. uh, what is your guess? Please write in the comments. Would you be better off just going to a casino and maybe doing the slot machine or playing blackjack, or if you came to the markets and did some trading, what is more rewarding? So SEBI has come out with an analysis of cash market players, uh, those who do intraday trading, and individuals, not corporates or HUFs or other entities, but individuals. So the findings are about who has participated in these markets, what is the proportion of profit loss, who's making profits, who's losing, what are the trading profits, what is the profit loss ratio, so on and so forth. And so within participation, what they found is 1 in 3 individuals who trade in equity cash segment trades intraday, which is very high according to me. So just imagine all the people who are, having long-term portfolios, short-term swing traders, hourly traders, BTST traders, all kinds of arbitrage between cash and futures market. All of them put together still have 33% people who trade equity cash segment intraday. I didn't realize that there was such a big, 1/3 of the population who is touching cash market is actually doing intraday trading, of which the share of young intraday traders, age less than 30 years, has grown to 48% in the last year versus 18% in FY19. So this is clinching evidence what SEBI is saying, what Finance Ministry is saying, that stock market trading, and especially intraday trading and options trading also, is attracting a lot of youth of our country in hope and who are seeking quick redemption, quick money in whatever they are doing. and of course, it is possibly destroying a generation doing that. So this is very stark evidence of why the regulator and the finance ministry wants to up the curbs so that young intraday traders don't get sucked into trading or intraday trading. Trading per se is no problem at all. I mean, I don't see trading as a problem. I only see all this influencers who influence others to show them as if trading is a very easy uh, occupation or profession, and you will come into the markets and you will make millions of rupees, and and people have destroyed their homes with forex, with options, with intraday trading, and that is why there is some sort of a moral outlook of the government and regulator towards this. Share of very small traders, annual intraday turnover less than 50,000 has also increased. So it is not just big traders, big intraday traders who are coming into the market, but very very small traders. 50,000 rupees of intraday turnover uh, in a year is extremely low. So it's just that few trades, few interactions. So somebody is just trying to fish, and that has gone up to 56% of the small time traders. 7 out of 10 individuals who are doing intraday trading, that is 71% actually, incurred net losses in FY23. So if you recall from the FNO paper, 89% people were making losses in FNO trading. So cash market ratio is slightly better than FNO traders, but 71% is a very pathetic number. 7 out of 10 are actually losing money, which is not a good thing really. Proportion of loss makers increased further to 80% for traders with very frequent trading activity. So this is also coming out of the data that if you do very frequent or more frequent or more number of trades, then the losses are actually the loss making accounts are actually more. They're 80%. So out of the 71%, if you see those who are doing very frequent activity, it's actually more. It's almost 80% then. uh, Percentage of loss makers for younger traders. So again, 76% in FY23 were young traders who made losses compared to other age groups. So it is essentially a lure that people are getting lured into this net. And even after 3 years of being there, 54% were loss makers in FY23. And FY23 was not a bad year for a market. So let's also see the context that FY23 was not bad for trading. It was not really a waterfall year in case you feel that most traders only trade long. Even then, 54% traders with 3 years of experience were making losses. Now let's look at the trading and net profit loss. So bottom 78% traders, when they're sorted by turnover, accounted for less than 1% of the total intraday turnover. So a lot of traders are trading, but their trading is nothing compared to the top traders of FY23. Top 6% traders are accounting for more than 90% of the. This has beaten even the Pareto principle by a wide margin. Top 6% traders are accounting for more than 90% of the turnover. So, uh, if you are, and it is not necessary that these top 6% traders are profitable. So, but a turnover is extremely huge. 76% of individual traders with turnover more than 1 crore were loss makers. So it is not just small traders who are losing money. Big traders with annual intraday turnover of more than 1 crore were also loss makers. Then you have annual turnover of more than 1 crore incurred a profit and loss of 34,000. So that is not much in terms of when you're doing turnover of 1 crore. But for turnover of 1 crore for annual, maybe your average capital that you had was only very, very small. So basis that capital, for instance, you could have 1 lakh rupees and you are trading based on that. Uh, and you do that for 100 days, a turnover of 1 lakh each. If you'll hit 1 crore of turnover, but out of your 1 lakh, you've lost 34,000, which is a huge loss in a otherwise decent year. Average number of trades by loss makers was higher than profit makers. So this also has come out very nicely, that you don't need to do too many trades to make profits. The winners in the market are those who will do less trades, and because of less trades, you will incur less costs, less STT, less SEBI charges, less brokerage, and potentially you will make lesser mistakes also, and you will have a higher time frame likely if you're doing lesser trades. Cost of trading in FY23, loss makers exacerbated their trading losses by 57% due to trading cost. So trading cost is the main sort of loss making cost for trading. So on an absolute trade basis, not so many people lost money, but when you added the cost of trading to it, they that was 57% of the cost. And profit makers incurred 19% of trading profits as trading costs, and this substantially will go up now as STT etc. has also gone up, or the capital gains. Well, intraday will anyways pay business income, so capital gains is not a part of this. So this is a very nice graphic that I found on Twitter, which is showing you casino gambling versus day trading, and this is based out of data from the Wall Street Journal over the US markets. And it claims that 13 out of 100 gamblers leave the casino a winner. I think a bit high, but still it is somewhere double digit at least. And in day trading, 1 out of 100 day traders reliably beat the market. The key is reliably. You may beat the market in 1 year, you may beat it in 2 years, but when you see it over a 10-year period, are you able to reliably beat the market on a consistent basis? And that number is very, 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 very small. So I mean, from a probability point of view, you are better going to a casino. If you're losing money intraday trading in the markets, might as well go to a casino and improve your probability. I mean, you'll have fun also, and maybe you'll lose less. That is the sort of situation that people have put themselves in. But because it is available to you on the mobile, on your desktop, you are, sucked into doing it. And the casino is not available there immediately. I mean, maybe you have to go somewhere, or maybe you have to play on some illegal website. But this is very, very stark. I mean, one should, of course, it is easy for me to say because we are so far away from trading that we look at the portfolio once in a week. But those who are addicted to day trading, they should try all de-addiction measures, leave trading for some time, uh, create a journal, look at your mistakes, jot down those mistakes, find some mentor to talk to, find some groups of people who you can discuss your trades with, read more about how you can trade better. Take, and all educators on YouTube or Twitter are not frauds. There are some genuine folks also. Go and seek their help if they are able to give you some good training. Day trading is a great profession, but you know not having a proper plan how you're going to day trade and learning out of your mistakes is a bigger mistake actually. So like for instance, if you treat trading like a part-time hobby, that I am working, I am stressed, my boss is also telling me to do 500 things in a day, and there's this trouble at home as well, and but while juggling all that, I'll do some trades on. Please don't do that. You will ruin not only your trading, but you will also ruin your domestic life. You will ruin your career and your growth there. What is your forte? If your forte is your career, concentrate there. Why do you have to trade? And if you think that trading is something that comes naturally to you, then you take a sabbatical from your job for 3 months and try hard to trade, and gradually build that skill. But this is not a part-time thing. So don't think that you will be able to, sit in a board meeting also and on the side you are doing some trades. That is a sure short disaster, which 99% people are doing right now. If you don't treat it like an actual business, so an actual business needs to have a proper plan, it needs to have proper capital allocation, it needs to have backup plan, it needs to be seen with a sort of a respect that I am doing this, so I need to do it properly. There are no cutting shortcuts. There is no like, I don't feel like trading today, so I will not follow my plan today. All that is just, you don't run businesses like that, and businesses don't succeed like that, right? And then, of course, the main thing is that if you don't have any rules system in place, if you are just fishing, that okay, I saw on television this stock, and hence I bought it, or somebody at the party last night told me something, hence I'm fishing. It's a sure shot disaster. And overall, if you see, it is more or less a zero-sum game, especially intraday trading. Um, some few folks are making a lot of money for sure, and a large number of folks are losing money. So it is just a transfer of wealth that is taking place from the lazy to the planned and the professional. uh, you have to become a professional. You have to get into that top 2, 4, 5, 6% league. You have to try hard. Maybe you will succeed, maybe you won't succeed, but draw a line that, okay, this is the capital that I'm willing to stake on this. If this capital is over and I have not been able to succeed, I will leave this. I will go back to doing what I was doing best, and I may start to invest. I need not trade. Trading basically for most people is the lure of quick money, and I can say from my experience in 29 years, very few traders are able to consistently make money. And you really need to be in a Zen like, almost a, I would say, uh, you know, uh, uh, it is a different state of mind to become a great trader or even to have fantastic trading ability. It won't come easily. uh, any great profession, can you become like a doctor tomorrow, or you become an architect tomorrow, or an engineer tomorrow? You can't, right? It is a long process of learning and then executing that. So don't expect that you can just become a trader tomorrow and that will take off, unless you have that runway that you're doing. And if you're losing, that's okay. I mean, but you need to be consistently improving also. You just can't keep throwing your family's money, in case you are using your family's money at this. I mean, you're ruining a lot of things, not just for yourself, but for your family, for your kids, for your wife, whatever. So this is almost like meditation. You need to get into that zone, that kind of a zen like mind frame, and then execute this. Like, for instance, at Weekend Investing, we have some rules, right? So we have rules about what to buy, when to buy, how much to buy, when to sell, and we stick by those rules regardless of what is happening in the market. 50,000 things are happening in the market, but we are stuck with we are stubborn, and we are sticking with our rules, and that has kept us in good stead. Yes, some losses, some gains, some time, but overall, I mean, it'll keep you very peaceful. You'll be able to sleep at night thinking that I have executed my plan. Profit or loss is not in my hand. So this is one very major learning in trading: is don't worry about profit and loss. Worry about whether you are executing a properly tested plan or not. If you are able to do that consistently over a long period of time, you will be doing quite well. But if this is an addiction that you've gotten into for no real outcome that is coming to you, please try to get yourself out. Any kind of addiction, of course, at a extreme can ruin a lot of homes, and that I have seen happen in the last 3 decades. I don't want anybody who's watching this video to go through that. So do share your experience also, what you've been going through. Try to improve what you're doing. In case you realize that this is not your cup of tea, do step aside also. It is not mandatory to have a trading career. So let me know your thoughts on this. I know a lot of traders will see this. Some may mock me for giving this kind of a sermon, but I hope even if one fellow can be saved from this current mania that is going on, this video will be successful. Let me know what you think. Thanks for this. Thanks for watching, and do share this video. Thanks. Bye.